Hi friends, Namaskara. Swagatam, Suswagatam. Kemcho, Majama. Jai Hind. Welcome once again to my YouTube channel, Net Worth Riches. Now this channel is all about increasing your net worth by giving you sustainable ways and templates to make, invest and grow your money and have good decision making skills for sustainable happiness and peace. Today I am going to be speaking about how you can yourself pick stocks up in the share market and have good consistent returns. But let me tell you that stock picking is not going to be easy. You have to go through a lot of pain. You can compare this to a first generational entrepreneur who's starting a business wherein the family members don't know anything about business, or in your case specifically have not invested into the stock market and have not seen the returns, but I've heard all kinds of stories like the Harshad Mehta scam and all, and they feel the stock market is like a gambling casino. So if you make a lot of money, you won't get that kind of praise and appreciation. But if you lose money, then be ready for a lot of pain, for a lot of humiliation, because they will tell you that, see, we told you not to invest. You would have rather invested into FDs. You would have rather invested into PPF. You would have done much better in life. So the first takeaway is have a big jigra and be ready to take the pain. Only if you can do that can you be a successful stock picker. Next, you have to understand timing. Remember, sometimes pharma does well, sometimes metals do well, sometimes oil and gas does well, sometimes infrastructure does well. You cannot time the market. Sometimes you might enter a good stock and you've entered when the stock is very high, and you've not got returns over the next few years. That could be the case. Always remember, the past performance is not guaranteed for future performance. There are times where even Warren Buffett has lost money in some years. But if you look over the long-term horizon, over 5 to 10 years, he has always made money consistently. So from this, you have to understand that timing when you enter into that specific stock or mutual fund is very important. Next, you have to understand the difference between a trader and an investor. There are many kinds of traders. There are day traders, there are position traders. They try to capture the alpha or the value over the short term. Whereas you as an investor, you have to capture value over the long term. After you've done all your research about the industry that the stock is in, all the research on the stock, the price to earning ratios, the profitability, its balance sheet, its cash flows, its return on capital employed. You've done all this basic research and now you're convinced that this stock is going to do really well. Then you go ahead and invest into such stocks as an investor, because your job is to look at the earnings per share, whether that is increasing consistently over a period of time. Because if the earnings per share is increasing consistently over a period of time, it will command higher price to earning ratios. Now you see, the price to earning ratio for an HDFC and ICICI Bank is much higher as compared to a UCO Bank or a Bank of India. Why? Because they've given consistently giving returns over the past so many years. So from this, you have to be an investor and not a trader, because an investor always makes money. Next important factor to consider is asset allocation. When your net worth, even in stock trading, this same logic applies. If you just invest 5% of your net worth into stocks, you won't give a damn if the stock market is going up or down, because 95% of your position is safe or your net worth is safe. Next, if you've invested 100% of your net worth into stocks and the stock market goes down, unfortunately you will panic and you will go ahead and sell. So along with timing, along with being an investor, your asset allocation also plays a very important factor while going ahead and stock picking. So if you're say investing 40% of your portfolio into stocks, even that 40% that you're investing, go ahead and divide that accordingly into various segments, like invest 10% into pharma, 20% into infra, 30% into oil and gas. You can mix and match accordingly. So for this, we come to our next point, wherein portfolio construction is very important. Look at the Nifty 50 are the top 50 shares on the National Stock Exchange. Similarly, BSE or the Bombay Stock Exchange has its own benchmark. Each and every mutual fund manager has gone ahead and constructed his portfolio accordingly. So go and study their portfolios and accordingly go ahead and construct your portfolio. It could be based on the index, like the Nifty and the BSE, or you can go ahead and follow all these portfolio managers and see how they have constructed their portfolios. You can go online and get the information, but you have to be very smart, because whenever they feel that a stock is not doing well, they go ahead and change the construction of their portfolio immediately. If they feel that banking is going to fall, they go ahead and reduce their exposure to banking. So you should be able to go ahead and time your portfolio construction accordingly. Next, you have to understand the difference between panic and greed. In 2020, when the stock market fell, everyone were panicking and everyone was selling. That was the time to buy. And when there's greed in the market, like right now the stock market is going higher and higher, so there is a lot of greed in the market. That is the time when usually big investors sell. Right now in India, I'm not telling you to sell, because the stock market, if you check my prediction video, I've already said that the stock market is going to do well till election time, because India is going to be a shining star. But I'm giving you a general basis. Please understand the difference between panic and greed and accordingly go ahead and invest. Next, you have to know to ask the right questions. Now say for example, if you're saying the oil and gas sector and you're thinking Reliance and Indian Oil are the same, they are not the same. Reliance has diversified its portfolios into retail. It has Reliance Jio, which it has just removed an IPO form. So Reliance is quite a diversified stock, whereas Indian Oil is mainly into oil and gas exploration and petroleum products. So please understand this difference. Now, till a few months back, with the most recent example I can explain, ICICI Bank had everything under its portfolio. So ICICI Bank and HDFC Bank were not the same, because HDFC Bank was owned by HDFC Limited. These were two different portfolios. HDFC Bank was different, HDFC Limited was different. So you cannot go ahead and compare that with ICICI Bank. Well, now of course, with the merger that has happened between HDFC Limited and HDFC Bank, now there is a general consensus where you can compare both the banks. So whenever you're doing, please ask the right questions and accordingly go ahead and invest your money. So from today's video, I gave you general ideas to consider before picking stocks. Again, let me just recap that for you. First, have a strong heart, have a strong jigra to take pain. Next, timing is the most important factor. You might get into the good share, but if the timing is wrong, everything is down the drain. Next, I've explained the difference between being an investor and being a trader. Next, I've also explained how you should allocate your assets. I've also explained how you should go ahead and do your portfolio construction. Also explained how you should go ahead and ask the right questions and know the difference between panic and greed. Once you've done your basic research on your stock market and you know these basic points, you'll become a much better investor. But this is not all that's required. I will be giving you more information in my forthcoming videos. So please go ahead and motivate me and smash the like button below, because this will definitely motivate me to bring you more such content, how you can make, invest and grow your money and increase your net worth, especially in the stock market, since that is one of the most lucrative ways you can go ahead and increase your net worth. So please go ahead and subscribe and smash the like button below. Thanks a lot.